Most retail Forex traders do not realize that the 24-hour market is not equally active around the clock. Some hours are slow and thin. Others are dense with volume, tighter spreads, and decisive price movement. The London-New York overlap is the most active window of the trading day, and understanding it can change how you structure your entire approach. The overlap happens every weekday when both the London and New York sessions are open at the same time. That window runs roughly from 1 in the afternoon to 5 in the afternoon GMT, or 8 in the morning to noon Eastern Time. For about 4 hours, two of the largest financial centers in the world are operating simultaneously. London is the biggest Forex hub on the planet. New York is second. When both are running together, liquidity surges. More buyers and sellers compete for the same trades, and that competition compresses bid-ask spreads. The cost of getting in and out of a trade is often at its lowest during this window. Volume is also at its highest, which means price moves tend to carry more weight behind them. A breakout during the overlap is far more likely to follow through than the same pattern forming during a quiet overnight session. Not every currency pair benefits equally. The pairs most affected are those involving the US dollar paired with major European currencies: Euro dollar, Pound dollar, Dollar franc, and Dollar CAD. These pairs see the highest participation during the overlap and typically offer the most tradable conditions. Economic data also clusters around this window. US employment reports, Federal Reserve statements, Bank of England decisions, these tend to land just before or during the overlap. That creates sharp, fast-moving price reactions. If you are not watching the economic calendar before you sit down to trade, you are taking on risk you did not sign up for. A few common mistakes are worth flagging. The first is overtrading. The session feels active, and it is easy to convince yourself that every tick is a signal. Most of them are not. The second is forgetting that the overlap ends. Conditions at 9 in the morning Eastern Time look very different by 1 in the afternoon once London volume drops away. Strategies that work during the overlap do not always carry over into the quieter afternoon session. One practical note on timing: the US and Europe shift their clocks on different dates twice a year. During those transition weeks, the overlap window can narrow or shift by an hour. If your strategy depends on precise session timing, check the current times rather than assuming a fixed schedule. The practical takeaway is this: before you trade, check the clock and check the calendar. Know whether you are in the overlap window and know what data is due. Those two habits alone will put you ahead of most retail traders sitting down to trade without a plan.